Hello and welcome to Trading with Technical Indicators. My name is James Boyd. We welcome all of you here today. Just real quick as we get started, I'd like to welcome all of you. We got Michelle, Greg, Robin, Ocean Life, AJ, Greg, Gary, and many others. We welcome all of you here today. We also have Cameron May in the chat, fellow instructor. So if you see his initials CM, you know that's Cameron May. Many of you know him. Now, just real quick today, we try to really start off with like a focus of the week. Last week, we talked about the word diagonal, okay? Today, as I look through the markets and the Dow, S&P 100, and the NASDAQ 100, you know what the word of the week is probably? Now, I'll give you a hint. It's a letter of the alphabet, okay? Tell me what you think it is. I'm going to tell you on the other side of the disclosures, but we're going to talk about that here today as we're kind of seeing some setups with a specific pattern. Now, remember when we talk about trading with technical indicators, okay, take a guess in the chat. What do you think kind of the focus is? The information here is provided for general informational purposes only. When we talk about stocks, but maybe also options, remember that options carry a high level of risk, not suitable for all investors. When we also talk about examples, those will be done in the paper money software application. Okay, I'm so interested to know if anyone got it. And I'll look in just a moment. And as we do our examples, I really ask you to practice paper trading. Whenever you learn something, kind of think as paper trading as like you're doing questions after you went to, let's say, a lecture in college or whatever. You're practicing what you're learning. I want you to do that here as well. Feel free to follow along in our trades. They're not as examples. We will be using the paper money account to practice what we're learning. And also remember that investing involves risk, including loss of principal. And today what I want to do is I want to really talk about, first off, kind of like kind of the path of trend indicators strategies. The reason why I bring this up that I want to talk about first is I think a lot of times we think, well, I'm going to talk about indicators first. I think you really have to have a sense of what you're really trying to do with what and why. And when we have trend down, when we have indicators down, then we could then talk about the strategy. But all three of them are important. So let's go here. Let's start there. And I want to kind of talk about this for just a moment, okay? So when we talk about, notice that indicator is coming in number 2. It's not the most important because you can have an indicator, but that doesn't mean you have a trend, okay? Now, first off, when we talk about trend, I want to kind of ask you a question, okay? When I kind of look at trend, I think short term, I'm thinking 2 to 3 days to 2 to 3 weeks, okay? When I think more intermediate, I think probably 2 to 3 weeks to 2 to 3 months, okay? 2 to 3 weeks, okay? 2 to 3 weeks to 2 to 3 months. And I know this, you might be surprised by this, okay? When I think long term, I'm thinking, let's say, something that would be, now when I say 2 to 3 months, okay, plus. So we're talking about something like a quarter or longer. Now, you might be stunned by that, but you got to realize in our markets, man, if you have something that's gone up or down in 3 months, it could be a drastic move to the upside. So let me ask you just a quick question real quick. What type of trends do you focus on? Okay, you focus on the shorter term trends? Okay, now this is important for indicators. Okay, this is set up question. Do you focus on short term type of trades? Do you focus on intermediate? Do you focus on long-term? What time frame do you really focus on? Well, if you kind of asked us and said, James, kind of what do you focus on in these classes the most? I'd probably say short-term, 2 to 3 days to 2 to 3 weeks. Okay, 2 to 3 weeks to 2 to 3 months. That is probably 80% of all the examples. Okay, it's not to say that we don't like long-term, but we're trying to get practice. Okay, so someone would do probably short-term if they have more time. Maybe there's an income focus, right? If someone says, James, I do more intermediate, maybe a blend of income and also trying to get capital appreciation. And if someone says, James, I do really long-term, you don't have much potential need for, let's say, short-term price appreciation, maybe income as well. You might be saying, I'm trying to hold them long-term to get the income, maybe through a dividend. Fine. And you're maybe not as willing to or don't want to trade the short-term price movement. That's fine, okay? Everyone's different, and we know we're all special, right? Okay? Now, good. Now, I want to kind of go over something. If someone were to ask me, kind of like, hey, when we do these kind of examples, 3 days to 3 weeks and 3 weeks and 3 months. What indicators are we really trying to focus on? The trend indicator, okay? Now, we call this, really, it's like we label the different types of trends 1 through 5. Now, you know that we do that, okay? The RS 5, 10, 21, 42, and the 63. Now, we had a little fun with you last week. We called this the Boyd Big Charts, okay? Now, who created those? Well, we did, okay? Who created the trend indicator? We did, okay? Now, when you say we, James and people in the class, okay, created that. Now, the other thing that's kind of important when we talk about the indicator is CAHOLD, okay? CAHOLD, which is close above the high of the low day. It's a bullish bounce setup. CBLOHD, close below the low of the high day, okay? That was created by myself and Kelly Allman. And what you're now going to see is that's a bullish bounce setup or bearish bounce setup. Close higher gap, okay? That's created by myself. And what you're going to see is close lower gap down. These are where the stock, maybe the previous day was up and then it gaps higher. Seen a ton of those. Or the stock was lower, but not a close below the low of the high day and it gaps lower. Some people, this is kind of trading. This is not kind of, this is trading on opens of market, okay? This, you're kind of really looking for more, let's say, close of day or near close of day. When you say near, what does that mean? The last 90 minutes of the market day, okay? Now, also kind of finishing this out, we always talk about the breakout, right? The 20-55 day, okay? We talk about the whole moving average, okay? Counter. And I'm also going to include with this the moving average cross. Now, by the way, these are all indicators, right? So if I saw something and there was trend 1 and it goes to 2 or trend 2 to 3, that's an indicator. If I saw something where the relative strength was strong over multiple different periods of time, I'm trading the relative strength. If I saw a bullish bounce, CAHOLD, that's an indicator. If I saw something like Amazon today or Amazon over the last couple of days that closed higher yesterday and then gap to the upside, that's an indicator. Breakout, maybe it's a 20-day breakout, short term, intermediate 55, that's an indicator. Now, if I saw something like a MAX for moving average crossover, that's an indicator. Now, here's the thing is, once you start getting about 8 or 10 indicators, you start to get duplication of the same stuff. How many of you recognize that? How many of you recognize that you start putting up 8 or 10 different indicators, they all start looking pretty similar. Now, I'm going to kind of write here specialty, okay? These are not ones that we probably use all the time. Flag could be an indicator, a setup, okay? I would also include with this a week percent to kind of track price performance, okay? I would include here the week percent, which tells us something that it might be a bull flag pull. A month percent, kind of like what type of trend are we in? But I would also include there the year-to-date percentage. When we also talk about specialty, we would include the IB percentile plus technicals, which is what we focus on earnings, okay? What technicals? We focus on this right around earnings or market, okay? Market sell-off. And the other thing is probably MACD divergence. And I'm going to say a bull divergence. And those are the ones we focus on. So I want to be very upfront. If you said, hey, James, in your classes, like what indicators do you focus on? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Now, does anybody know anything that's kind of surprising here? When I write it out like this, what kind of surprising? I don't see anything about the RSI, stochastics, the Arun indicator, the awesome indicator, CCI, right? I don't see anything about that. So here's the deal. I'm not saying that that's bad. I'm just saying that if we grab probably these 8 or 10 indicators, there's a really good chance they're going to be showing something very similar to something else. Now, I'll tell you what, these indicators are customized to the types of trends we're doing. That's very important to understand that. They are also customized to the type of strategy that we're doing. Now, if you take a look at this, strategy. Now, here's the thing. You can know all about trend. You can know about the indicator, but the sharp end of the pencil comes really down to, can you trade the stock? Now, I'm also going to say stock, and I'm also going to include long synthetic. You're going to be seeing an example of that here today, okay? Long synthetics. And if you really go back to and kind of say, well, what other strategies do we really focus on here? Well, the big thing we focus on, if someone's willing to buy the stock, someone might be willing to buy the stock at a set price from the time they sell the put until expiration. They might do quite a few of those. Short put verticals, okay? And I'm going to also include long call verticals, okay? And the last but not least, if you follow me at all, you know that some of you call me James Body to Body Boyd or James Collar Boyd. Look, my middle name's Sterling. But if you, for example, want to call me that, you can call me whatever you want. So if someone really said, well, what is it that they really do? They specialize in 2 to 3 days, about 2 to 3 days to 2 to 3 weeks, intermediate 2 to 3 weeks to 2 to 3 months. There's really 2 hands or less of indicators they really talk about. Well, why are there not just 2 or 3 indicators? Well, it depends upon if you're assessing trend, relative strength, you're looking for a bullish bounce, you're looking for a breakout, you're looking for maybe for moving average crossovers. So there's reasons why there's different types of indicators. And when you talk about strategy, if we're talking about from the bullish side, man, it really comes to one and two. These first 2 are very similar. One has an expiration, okay? One actually has a right to the dividend. But the deltas are similar, right? This is the potential ownership of stock. This is, for example, trading the probabilities of being above the strike prices, one a credit, one a debit. And really, this is a collar that we talked about. It could be a buy right strategy, buy right, okay, or leg in. Now, the reason why I kind of outline this is, have you ever asked anyone to say, lay out kind of the strategy that you do? And they can't really summarize it. We're into this probably 10 minutes, and this is a summary of what we do over and over and over in 10 minutes. Okay? Now, what I would like to do, are there any questions? Oh, yeah. Art says, James, your middle name is Fibonacci. Okay, I like that one too. All right, a little fun there. Now, what I want to do is I want to kind of talk about, so I asked you, what might be the focus of this week, okay? Well, the focus of this week, when I saw a lot of stocks, and I want to kind of pull this up. So if I were to kind of say, what's going to kind of be the focus of this week? It sure seems like there's a lot of stocks that are a little stretched. If we brought up a stock or market or sector, we might say if we looked at the RSI value on many of these stocks, some of these are pretty daggum high. I'm going to kind of put that RSI, and we could put stochastics as well, but I'm going to use RSI to kind of get a gauge of how piping hot some of these trends are, okay? Now, if you look at, let's say, the SPX, we've kind of been pushing up near that overbought region, okay? Now, if I brought up a stock and said Amazon, and how many times on Amazon do we get to the 74 level of the RSI? Not very often. So when I look at the markets, I think there's a number of stocks, we said this last week, that were still strong, and they still are. But the biggest thing, I think they're probably ripe for profit taking, protection, and maybe stop adjustment, all the above. But I think there's also some stocks that obviously have some high RSIs, and there's some other ones that really haven't moved as much yet. Now, what sometimes happens is investors will profit take on the ones that have been going straight up, and they'll take that money and they'll come around to maybe some other areas that just haven't gone up as much. Okay? So first off, I want you to be thinking in your mind, which stocks might be, let's say, appropriate to assess targets, adjust stops, consider buying protection, all the above, okay? Profit taking, use the RSI tool as a gauge, okay? practice looking at that. Now, the biggest thing, our focus here, is I would like to look for some stocks that might be not as correlated to the market, maybe just starting to move. Now, what I want to do is I want to pull up a stock and I want to go back to something, and I want to go just real quick to Boeing. Now, what you'll notice is Boeing does not, for example, have an oversold reading. It doesn't have an overbought reading, but it does have an RSI of about 60, okay? Now, last week we kind of talked about this one and did an example. And what you're now going to notice on the right-hand side, now don't worry, we're going to do lots of examples, okay? So in our first example, you're going to kind of see that this plateau that we're at right now was kind of where, well, the dam broke. And price, water, okay, just spilled out, okay, to say the least. And now what you're going to notice is it's been kind of in this V pattern. Now, I haven't given away kind of what the letter is, but on this one, what you're going to notice is kind of Boeing kind of looks like a V, and it might have a little pull back there, and we kind of have like a little bullish engulfing. Now, if you kind of said to yourself, well, geez, James, is this one maybe a little volatile? I'm going to tell you right now, you can know about trend, okay? You could know about indicator. But then what happens is at the sharp end of the pencil, rubber meeting the road, what strategy are you going to use? Well, the reason why we're going to choose a short put vertical is we're trying to play the probability. We're also trying to play the volatility. We know that it's been a pretty volatile ride, hasn't it, on Boeing, to say the least. And so the volatility, decent, is at 36%. We're going to come down here to the 150s, okay? And now the 150s right there, $3 bid, $3.10 ask. And what we're going to do is we're going to sell, okay? Now you might say, well, James, why don't you come to this one? Well, we're trying to kind of have something that might be a higher probability of being right. Now, if I came back to this chart, what is the type of pattern that we're using? It's a V pattern. If you go back also to the chart, you kind of see this little CAHOLD, 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 and CAHOLD. Now, why did you make those dots? Well, it was really to help people see the bullish bounce setup. That's why, okay? Now what I'm going to do is going to go to the trade tab. We're going to right click on the 150, go to sell, go right to where it says vertical, okay? Now here's the thing. I want you to paper trade alongside with this. These are not recommendations. Say that twice. We're going to sell the 150, buy the 145 with the idea that maybe could that stock push up above that 150, high 150-ish level, 159, and push to the upside. Now, if you said, hey, James, I like kind of maybe a long call vertical as well, I want higher potential upside, fine, have it your way. We're going to do both so we can see a side-by-side trade example. So buckle in. I'm going to sell the 150, buy the 145, $1.11 credit, 3 and change on the risk, 386. And we'll just take 114 divided by 386, and it'll give us a ROR. That ROR, if we see this for about 39 days. Sorry, my calculator's not coming up, so I'll just tell you what it is. 114 divided by 386. It's about, that doesn't look like a lot, but that's a 30% ROR right there. Take the 114 divided by 386, okay? We're going to go ahead and send the order. We're just going to do one contract for the example. And then if you said, James, I want a higher potential upside, we're going to go the in the money strike, the 155. We're going to buy that and then sell the 160. Now, when we talk about a long call vertical, we don't mind. We just want something that's in the money, not in the money by a quarter, a buck, or something like that. Something that might have $2, $3 of intrinsic value. If we're at 160 and we buy the 155, there's $5 of intrinsic value there. That's why we're choosing that. Now, debit there, you're going to see that right there, max profit, max loss, and note the commission. Now, if we kind of said which one has a higher potential upside, of course this one does. Okay, which one is more probability based? The short put vertical. Okay, If we went back to this chart and said, well, what type of trade setup are we trying to trade? Well, we're trying to play the little CAHOLDs, but it's also kind of something that in the shorter term, if we went back to the kind of the diagram, what you're going to notice is it's really focusing on the breakout 20, 55 days. So if you don't mind, I'm going to kind of put a little BA here for kind of something that we focus on in this example. Okay. Yeah, I see what it is. Apologize about that. Keyboard faked me out. So we're going to kind of put a little BA right there for just a moment. Okay. Now what I'm going to do is let's kind of go, let's go back to something. Okay. Put that right there. BA. Did the trade fill? Something filled. Let's see what filled. Okay. So there it is. So those both filled. Now, the word of the week, and I want to kind of show you some stocks. Apple, for example, if you zoom in on this, what has this been an example of? Okay. Now, remember this chart, whenever this was a crossover, right? And we've just seen that green shading saying, catch me if you can. That doesn't literally say that, but you might be thinking that. Okay. Now, if you kind of zoom in on this, what you're going to notice is 1 day down, 2 day down, bullish engulfing. And then if we close above or trading above Friday's high, well, there's another dot. Okay. Now, these scripts, just remember, they're not guaranteed for accuracy or timing, right? Verify. You want to have an understanding what that's showing you. And so what you're now going to notice is if we go back to a 3-year weekly chart, this is the chart. So in the short term, you think, oh, it's gone so far. There's no way it can go any higher. Now, this is going to be maybe my last one as far as something that's had a stronger trend. But I'm going to go back to this, and I'm going to just try to do a caller that we did from last week. Okay. Now, what I'm going to do is I'm going to come back into the trade tab. I'm going to go back into the IRA account. Why? Well, because that's where we have more capital. We're going to buy 100 shares of stock. And then what we're going to do is we're going to sell a call. Does anybody know where we're going with this? Well, if we go single order, first triggers SEQ. Step 1, we're going to buy the shares. And the shares are just laid right there. Step 2, we're going to go to first triggers SEQ. And we're going to click on the call. There's your covered call. And last but not least, we're going to come over to the put side and try to buy something as close as we can to the delta 30 to 40. Now, maybe a goal might be, James, if you're collecting 281, could you use that premium to pay for all of the put and maybe have a little credit left? That's the idea. Now, in this example, I won't go through the numbers right now because I want to talk about some other things, but this is really a caller. This is a buy right. We're buying the stock, writing the call, and protecting at the same time. So let's kind of change that language. Buy, right, protect. Okay. So when I say buy, right, protect, what does that mean? Well, we buy the stock, we sell the call, and we buy a protection, which means we're buying a put. Now, notice when we do this strategy, it's vertical-like, but it has underlying shares. So the delta on the strategy is going to be higher. It's going to feel more like having a cash secured put, not a short put vertical or long call vertical. Okay. Now, how many of you have gotten some practice on that from last week? Has anyone gotten any practice on that? Now, if you don't mind, as I'm kind of getting some comments back for just a quick second, okay, I want to just kind of type in these numbers. You kind of might be wondering on this, and I could punch in this fast. If you kind of said to me, well, James, what is the maximum gain on this? What's the downside? Let me go ahead and just punch in those numbers just real quick, if you don't mind. Now, stock appreciation, we got that 23 cents. Okay. All right. So here it is. Okay. So the numbers of that trade from 246.71 to 255, the stock appreciation was 829, just basic math. Okay. Now, was there credit or debit? There was a credit, slightly more for the call than the put. Maximum gain on that trade, 852. Stock loss, you're going to see that it was 671 from there down to there. But you got to remember, we got a credit, okay? And if we get a credit, it means the max loss is a little bit less. And let's put a little asterisk here. This is pre-commission. Okay, that's pre-commission. Now, if we went back to this and kind of showed this for a sec, callers buy right protection or leg in, and I want to also kind of include what type of indicator are we doing? Well, it's really a CAHOLD, okay, on Apple, okay, close above the high of the low day, and it's really something that's more trading at the high of the low day. We're not in the last 90 minutes, but if someone's trading it in intraday, they're thinking it could probably close there. The keyword is they think. Now, note the commission on that for selling the call, buying the put. Let's see if that order will fill. It took it, okay? Now, that position, what you're going to now notice is there's shares in the portfolio already, okay? And you're going to see that it's going to add more shares on top, okay? We'll talk about that more tomorrow. Now, the word of the day, the word of the week, when I started looking at a number of stocks, I started kind of seeing a whole bunch of stocks that kind of look like what type of patterns. Now, remember, most of the stocks that we see out in the marketplace, they really kind of have something where the RSIs are really high. What if the investor says, James, I'm already in those, and I've enjoyed it greatly, and I bet you have. Okay, but wonder if you said, I'm kind of looking for something that maybe is not into that, hasn't made the big move yet. Well, let me kind of show a couple stocks that we're going to do some trades on with strategy, and let's kind of talk about the focus of the indicator. Well, first off, what you're going to now notice is we kind of see the RSI kind of being the oversold, and what you're now going to notice is kind of that we see this right here. It's not going as low as before. Okay, fine. Some people like to look at it like that. Other people just kind of like to look at the price where it dropped down, went back up, dropped down, went right back up. So now when we talk about patterns, okay, and we could include this with maybe our indicators, we talked about V patterns, right? And then we also have variations of W patterns. Now, some of us love these patterns, okay? Some of us really like a V pattern, but maybe not as familiar with it, but there's been quite a few of them. W patterns are more frequent than V patterns. W patterns could be like classic double bottoms. The other type of pattern could be something where we get a tilted up bottom where the second V of the W is not as low as the previous low. And then last but not least, we see kind of like a slanted down W. Now, if you asked us which one is our favorite, we'd probably say this one is our favorite because there's a higher low. If we kind of said maybe second, what might be the favorite? Probably would say this one because we're getting above the middle of the W. And this one is what we talked about last week, which is a downward channel, which relates to what? Well, a breakout, and it would be that diagonal breakout, okay? Now, that diagonal breakout could also be a part of a flag, okay? Now, in our example, which one is this? Well, it's kind of really more like in number 2. Now, if you see a W pattern setting up, you might say, yeah, James, I see it maybe turning, but maybe I don't want to get in yet. Well, let's do a stock trade for some of you who say, James, I don't trade options yet, but I want to kind of get in the pool here, okay? And what I'm going to do is I'm going to kind of draw a line of resistance, okay? And what I'm going to do is I'm going to kind of right-click on the chart. We're going to go to where it says Buy Custom with OCO Bracket, okay? Now, if you look at this, what we're doing is we're saying, look, we're going to buy the shares, 100 shares, just an example given. And we're going to say, look, if you get at or above a certain price, get in, but I want you to, there's a cap on what I want you to get in up to, okay? Now, if we said, for example, hey, get in at 32.50, okay? So it's just a little bit higher than where we've been just in the last couple days, okay? And what you're going to notice is we're saying what you're now going to notice is if we get to that price or higher, get in. And this is the cap on what we're willing to buy it for. Now, many of you do not like to do buy stops, but I'm going to tell you this. If you're playing reversals and you're trying to catch that push to the upside, having an understanding of doing buy stops is critical. A lot of you might not like doing buy stops unless there's a cap on it, okay? Apple does, Phil. And we're putting a cap on it right there. Now, the wider the cap is between the limit and the stop, that width, the greater the chances you could get filled. Problem? This stock goes to above 33 and does not come back down inside this range, you're not going to get filled, okay? So that's the kind of the con there. Now, what we're going to do is data GTC. Now, is this an option trade or a stock trade? Well, you don't have an expiration, there's no strike, and it says stock 3 times. This is a stock trade, okay? Now, if you've never done a buy stop limit order, today is your day, okay? So the biggest actually thing is, if you kind of said, James, when we're talking about, let's say, this pattern of, let's say, V's or W's, I didn't want to give it away, okay? Didn't want to give it away, because then you're like, okay, I want to, so now I can put it there, okay? V's or W, these are really going to be more buy, stop, limit orders, okay? And where's the buy stop? It's right above the middle of the W. Now, don't worry, we're going to do some examples of this. Now, if we looked at this and said, where do we think this could potentially go to? If it were to go to the upside, where might it try to go to? Well, I don't know. Maybe if we kind of said the low side, maybe 34. If we kind of said maybe the high side in the short term, maybe 36. Some might kind of take somewhere in the middle. Now, here's the deal. Do we know it's going to go up to there? Not a clue, okay? We can look and see what the probabilities are in a certain length of time. We're going to put a 36 price target. We got to stop. Guess where the stop's going to be? It's right underneath the double bottom area. Well, that was easier, okay? 30.63, less 3% because it's lower than 50. And we're going to set a stop at 29.71, okay? 29.71, there it is. Now, you might be just kind of baffled and said, James never talks about ketchup, ever, okay? Well, you got to remember something we talked about on Friday, kind of the bullish MACD divergence. If the VIX is starting to diverge, the lower beta stocks that haven't been as correlated to the market lately, or the ones that might be more income generating, they sometimes can start to perform better than the higher beta names or the higher, more volatile names. Now, I need you to understand something here. These could still be viewed as trades. This is not like we're a 5-year investor on ketchup or Kraft Heinz, whatever you want to call it, or whatever. I doubt they have just a product line of ketchup. They're probably kind of tied into other product lines as well. Double check me on that. But probably their main product, ketchup, okay? If you looked at, kind of saw each one of these brands like General Mills, it's not just Cheerios. They have lots of different product lines underneath that umbrella. Now, we got a target, stop. But remember, this is a buy stop limit order, okay? And read what it says there in red to verify that you understand that. Send the order. That order is just kind of sitting right there. To me, that might be a little high. I might be okay to kind of, oh, that's the buy stop limit. The 32.50 is the trigger price, and it's just right above that intra-wick high. Ricebird says pickles. There you go. Okay. Now, what I want to kind of do is kind of show you this, okay? What are some other stocks? So I want to kind of write in here, now that we kind of got there, I want to kind of write in here these V's or W's. And by the way, this should be something like pretty cool, which is what we're saying is I don't have to be the master of all strategies. That is correct. Because if I pulled up like a CCI or ADX, what you'll find is they look very similar to what we already have on the chart, okay? And everyone likes to have their secret hot sauce of what they called after them, their own indicator, okay? But it's showing pretty much the same thing, Now, they don't tell you that because they're trying to sell you something. I'm not trying to sell you anything, okay? I'm just trying to tell us the trend, the indicator, or an indicator to try to see the entry-exit decision. Now, if we look at that, I'm going to go back to a couple other stocks that are kind of doing this as well. Now, one of the stocks that is kind of doing this, I'm going to go back to Google. Now, if we look at Google, and I want to kind of draw this in for just a second, okay? Why am I bringing up Google? Well, last week we talked about diagonal lines. You got a high, and then you got a high, and then you kind of had a high. And what you'll notice is, how do I know where the highs are? Easy. You'll see that we drop down in price, and then you come back up. You drop down in price, and then you come back up. Wherever you came up to, that's the lower high. Wait. What happens if all of a sudden we don't fall back down and we kind of stay higher? And then we get a moving average crossover. What does that potentially signify? Hello. We would say that that is a very high likelihood of a diagonal breakout. Now wait, if you got a diagonal breakout, there's a very good chance that we also see on that chart is a moving average crossover. But James, I like to make my indicators so complex that I don't even take my own signals. You can do that if you want to. Meanwhile, back on the ranch, we're going to trade the actual just moving average crossover setup and the diagonal breakout. Now, what you're now going to see is we're going to zoom in on this to the right-hand side. There it is. And you're going to see that we kind of had one day down, close above the high of the low day again. There's the green dot for CAHOLD. We went down for a day, and then we're firing back. Candle type, piercing line. This is your classic example of kind of something more like if today we would have gapped to the upside, that would have been a close lower, or I should say close higher after a red candle, and then gap to the upside. We did not gap to the upside, but the intraday price action was right around S1, known as support area number 1. Now, what you're going to notice is another green chocolate chip cookie. Now, wait, James, is it really a chocolate chip cookie? No, it's not, okay? It's just a green dot. Now, I'm sure we could probably make it a little icon of a cookie, but we won't do that today, okay? Now, what you're going to notice is, why do we get that dot again? Where did it go? Well, remember, that dot is going to show up intraday. The dot was right there, but the price fell down below the high of the lowest, most recent red candle, and that dot is showing, it's blinking because the stock is going up, down, above that day's high. Why is it there now? Because the current price is above that high. There it is. It's off. And so it's below. So some of you have asked that question. Will these kind of indicators show intraday? We're seeing a classic example. Now, what I'm going to do on this is I'm going to go back to this and kind of look and see where might that stock try to go to. Well, if someone was kind of saying, James, we had a prior high here and we had a prior there, okay, some technicians might be thinking, could it go right back to the upside? Now, James, if we kind of looked at the pattern on this, when we have diagonal breakouts, what type of W's do we have on the chart? Survey says that's a tilted down W. That is your downward channel, okay? When you get the diagonal breakout, that diagonal breakout is going to be right around your moving average crossover, okay? Now, if we take a look at this, and I'm going to do this quickly, we're going to set a stop. We're going to sell the put, okay? I'm going to do this quickly because I want to get to quickly some other things. We're going to sell the put, and for time's sake, okay, I'm going to sell the 175. I'm going to be a little bit more aggressive. If you sell higher delta, okay, this has a greater chance of the stock being below the strike price at expiration. Understood. I'm going to click on the 175, okay? And what we're going to do is we're going to try to move the price to 430 to try to get a little bit higher premium by nickel. Confirm send. If we had more time, we could buy a downside protection. And what we're going to do is we're going to sell the put. Now, Okay, took, fills. Okay, now here's a couple other stocks. I'm going to kind of flash a couple other stocks that are kind of doing this. Okay, IMLN. What type of W do you see on the chart? You see it? Is it slanted down? Is it double bottom? Or is it kind of tilted up? Pretty simple to see, because if you kind of look at the right-hand side, look at the recent low. Where's that low compared to this low? It's higher, tilted up. The one thing you'll also notice about a tilted up W is the MACD is not going below zero. If the investor sees that, okay, they might I won't draw that. Okay, I usually would, but today I'm not going to. Okay. I'll draw one more thing. Okay, stop cracking myself up. Okay, I'm not serious. Okay, so here's the deal. If all of a sudden, if we can hold, for example, that 140-ish area, I mean, we already went intraday high, right? And the path of least resistance is 155, the MACD staying above zero. So holding the momentum. Keep an eye on Illumina. Now, the other one that we're kind of seeing as well is VRTX. Okay, that's another one. Same setup. Falling down in price, run to the upside, pull back, not as low as what it was before. Notice the MACD is staying up. Also notice here, when we look at the stochastics or an RSI, we're not seeing those overbought readings like on so many other stocks. Okay, now when we also look at stocks like TMO, okay, kind of more of your example of almost like a diagonal break. Okay, you see that on the chart, kind of drawn down, kind of getting right in there. Notice that kind of breakout kind of happened right near the moving average, getting a moving average crossover. Keep an eye on Thermo Fisher. Target also kind of reversing as well. Fresh low, new intraday highs, or lows, I should say, with a breach. Now, what you'll notice on this would be like a shorter term high and perhaps a fill in the gap trade. And my gosh, we've done a lot of gaps and fill in those gaps. You're going to also notice that when you look at Pfizer, you're seeing that same setup on Pfizer. Drop down in price, run to the upside, not pulling back as far. And now we're right here at the middle of the W. If you get above the middle of the W, it's called a higher high. Notice on the MACD as well, you're seeing the MACD not going below zero, okay? Now, the last one I'm going to mention, so sad, but amazing how fast the time goes. The one that we've talked about for a little bit, we're going to continue to keep an eye on is ALB, okay? If you look at silver today, pretty good move to the upside. Gold, if you actually look at gold, it's also trying to reverse to the upside. Copper as well. We're wondering if some of these basic material stocks, which ALB is, can it finally break inside this old channel? Keep an eye on this as well. This is kind of more like your shorter term V pattern. A recent break in support, snap back to the upside. Keep an eye. These are some of the stocks that I wanted to talk about. So I want you to kind of think about in terms of like what type of trend length are you looking at for yourself? You're not trying to become the master of everything, but what do you want to focus on? When you talk about indicators, what indicators do you like to focus on? When do you like to use them? It's okay to say, look, James, I have 8 or 10 indicators that are used at different times, and let me tell you why they're used at different times, okay? And there's reasons for that. And then what strategies do you like to focus on if you are looking to be bullish? You don't have to do all strategies, but what are some of those key strategies that you like to use for yourself, okay? So I'm out of my time here today, but I wanted to kind of lay out that kind of blueprint between trend, indicator, and strategy. I'm out of my time here today, but remember, if you have not subscribed to the Trader Talk channel on YouTube, do it, okay? You go to YouTube, Trader Talks, Schwab Coaching Webcast. You can find us there. Free to subscribe. You can find that subscribe button right in the middle of the page. Let me send that link out. Also, you'll notice if you go to this is our playlist for our class right there. That way you could see all of our previous classes right there, and you could watch those, okay? It's better than watching TV because the TVs are just reruns. And what you're what you're now going to also see is you can find Cameron and myself on X as well. Follow us there as we post educational content there as well. Now, remember with what we discussed, it was done for example, illustrative purposes. The focus of what we talked about here today was W patterns. Looking for maybe some stocks that aren't as maybe potentially overbought, looking for some short-term price reversals. We did some examples on some stocks, examples, and option examples. Your homework is to go out there and find some of those W patterns. And they could be double bottoms, like two V's at the same level, or higher lows, or slanted down. I want you to practice also looking for those diagonal breakouts if they are slanted down. Now, stay tuned for our next webcast coming up right at the top of the hour. And thank you so much. Thank you, Cameron. And this has been the class on trading with technical indicators. Have a great day. Take care. Bye-bye.